Welcome back to another Lions and Tigers video. This week we're going to do the closing entries. First I'm going to show you the 3-step and then I'm going to show you the 4-step. And I'll explain why one is sometimes preferred over the other. The theory is the same though. So the first thing that we have to do regardless is we have to close revenue. Now I find it's easier to do these closing entries if I print out the adjusted trial balance or the income statement or the financial statements because they help me with this process. Revenue has a normal credit balance. Revenue has a normal credit balance. So to make it go away, we need to debit it. In the 3-step process, we close revenue straight into retained earnings. Because if you think about the retained earnings statement, remember we take beginning retained earnings plus net income minus dividends to get ending retained earnings. So grooming revenue is a part of net income and it's increasing retained earnings. Secondly, we're going to close all of our expenses to retained earnings. And in reality, it's easier to close them and it makes more sense to close them as one entry. So we're going to go through and we're going to credit each expense account. And that's because expenses have a normal debit balance, so to make them go away, we have to credit them. So the first thing I'm going to do is list each of them out. And once again, you can use either your income statement or your adjusted trial balance. I prefer the adjusted trial balance because then I can catch and see if I made any mistakes on the income statement. I like having those double, triple checks. And my interest expense, and this is 1,000, and this is 500, and this is 700, 75, 250, 170, 70, add them all up and you should get 2,765. This should agree with the income statement. So look at what we have in retained earnings so far. We started with a 0 balance. We added our revenues. We subtracted our expenses. And we're going to go on to the final step because remember, this is the 3-step process. We are going to close dividends. Dividends have a normal debit balance, so we need to credit them to make them go away. And we know dividends get subtracted from retained earnings. So dividends are going to go where? Well, they're going to go on the same side as the expenses. We're going to do the math, and what do we come up with here? Anybody know how to check this number and make sure it's what you expect it to be? Well, you're going to go to your retained earnings statement and you're going to see if this matches your ending balance in your retained earnings, and you should get $92. So that's the 3-step process. Now what I don't like about the 3-step process is I can't look at retained earnings and see net income. So if we go to the 4-step process, the idea is still the same, but the difference is that we close to income summary instead of straight to retained earnings. So now we're going to start with an income summary account. The only thing we use it for is closing. And we're going to close our revenues. We're going to close our expenses. And that is going to give us net income. So then when we post to our retained earnings, we close income summary, and this becomes 0. Our retained earnings shows our net income. And the last step doesn't change. We subtract out our dividends and we now have ending retained earnings. What I like about this is I can look at the retained earnings statement in a year and I can see net income and dividends. It helps keep retained earnings clean, and it shows you a very clear distinction that ties directly to the financial statements. You guys will be responsible for both, so please let me know if you have questions. Have a great day.